get this live. Was I not showing? Let me reload that. Well, that's going to break the highs anyway. I've got one that says upcoming and then one that says live. Why? Morning, Lewis. Just getting everything set up here. I think that says live. Cool. Right, let me get the links out. Market is on a big push right now. A lot of shit going off with the dollar, giving us some nice direction. We are live. We are live. There's that one. There's that one. Let's put this out on socials, get some people in. How are you doing this morning, Lewis? Good morning, CM. I hope you're well. How's the day treating you? Clean up my fucking desk, for one. If you're gonna take this photo. Bottle opener off. Inhalers, they can stay. Sunglasses, glasses. Empty mug. Actually, let's get some water in there. Doing great, we're about to have another baby, so we're pumped. Oh, congratulations, mate. Big news. Congrats. That's amazing. Happy for you. Right. Oof, sorry about that. Let's get this screen sorted. Price is coming back down on the pound, I see. Euro, basically waiting on a high, which looks like it'll be that one now. The pound, a little bit overstretched. That's the move I want to wait for. If you're being blind to the technicals, then technically this is your low and then that's your high, but it's just so far away from that EMA, I'm not going to take it from that. You don't want to take it from there. We've got a 5 minute. Will it come down to the 5 minute though? Five minute looks better on GU at the moment, just based on how close that EMA is. I mean, if not, then we've got a 61.8 as well. I'm liking the look of price this morning. We have completely obliterated those Asian highs and we're pushing even higher, and we've not got too much local liquidity to sweep from tops. We're just pushing higher and higher and higher and higher. So what I want to do is just check we already know that we're just blistering higher and higher on the day trade time frames. I said in the lounge I was too occupied yesterday. We had a 3-hour window to catch that trade, but we had a nice break of structure, substructure, break of substructure. If you plotted those lows to those highs there, like that, that's a perfect 71 John Wick trade higher. That would have made a nice 4% on that yesterday. But obviously, you literally had, like, after this 1 hour close, marking that as the high, even then you've got like a 1 hour window to spot that that's the retracement. So that move happened super fast, especially for a day trade, swing trade setup. You had the exact same thing on the pound as well. But unfortunately I missed that one. That was at like about 3 PM UK time, so like 10 PM at night for me. So I just missed that one, unfortunately. On the euro, we're now coming back inside this range. Okay, so I've been saying for the past few months now, these are the lows of the daily, which we've broke beneath. Now we're kind of seeing, okay, is price going to come back and retest this and sell off? Which it looked like it was going to do at first at the start of the year. Then it retested it again, and now we've actually broke higher. So now we're back inside this range, which is really good, okay? The reason that's really good is because now look at all of this canvas space that we have, okay? If this was our downtrend and we broke out of that boss higher, we're targeting these highs again. That's our next stopping distance, basically. So yeah, if we would have broke below, would have been nice because the same thing, but for these lows. But now that we're coming back in here, it's the same thing. What we didn't like was this whole area of what the fuck's going on, basically. That's your like no man's land. When you first break out of structure, you need that confirmation afterwards to actually confirm the direction. Okay. But now that we're back inside this range, it's really good because now we actually know, okay, here's where we're going. Obviously, we can't guarantee that, but we have a high probability of saying that with this. So, really good to see euro and the pound pushing higher again. If we check Here, where's our next session range? Because we've smashed for all the local ones. So price is currently here. We've got these highs. Let me zoom in on it a little bit. We've got these highs there, providing liquidity. That is a New York high, but it's not really a high on the swing time frames. Got this one there. Let's go lower. Yeah, so we've got those highs, that session high there, and then this one up here. So that's the levels that price could sweep or target to try and generate some liquidity. At the moment though, we're kind of just pushing higher. We've gone past the London Open now, so we're playing on the idea of trend continuation, that price is going to just trade in the same direction up until a little bit before New York Open, basically is what we're saying. So you can see this blistering run of higher highs and higher lows respecting this EMA. So that we marked out as like a valid liquidity level that price is going to seek. Our targets are below that, so we're in a valid trading range. This position isn't lining up nice and well. We just want to wait to see if price is going to reject from our zone before we look to enter. Check the pound. Pound's a little bit overstretched on this wave in comparison to the EMA. However, we might see something like this where it just temporarily comes beneath. For that reason, we're going to target the 61.8 fib on this. I might just add a few ticks onto my stop there. But yeah, this looks good to me. Let's share this one out on socials, get some more people inside. Bear with me guys, just posting these links out. Right. That's up there. Oh gosh. So basically, if you've just joined in the midst of that, we've smashed through the Asian highs. It swept liquidity, faked like it was going to break out, and then just wiped out everyone that sells off that Asian sweep. We've got an expansive move, making higher highs and higher lows. That's using our EMA as support. So we're basically just waiting on the next leg to come back down and push back higher. Similar story on GU. Smashed the highs, faked that it was going to sweep, and then wiped them out. Expanding higher, using the EMA as support. GU's a little bit more bullish, based on the positioning of the EMA with wave structure. You see this EMA is coming right up to that 50% fib of this last wave, whereas Euro, you've got the EMA nicely coming into that 71, how we like it. It means you get a deeper pullback and a bigger RR trade. You're able to put your stops beneath that low, which is a nice comforting feeling, whereas with GU we're going to have the low inside the wave, which isn't as ideal. But based on how bullish it is, you can get away with it in times like this. So all we're really waiting on right now is these lows to get swept, print some candlestick confirmations here, take a long, go higher. Let me just put our notation there. So there we've got a TP1, there we've got a TP2. I've updated my trading journal recently. I've gone back 11 months from when I started the VIP signals group 11 months ago, and I've tested whether you just use a TP1 like this and take the full profit at TP1, or whether you use the TP structure that I say, so like take 50% there, 50% there. It's good to have data like that so that you can see different variations of your strategy, so that you can always look to improve it. It's obviously just overfitting it for the past 11 months data, but within the past 11 months, taking the full TP at TP1 has actually made slightly more gain than if you had TP1 and TP2. And the reason that's really neat is because it also has a higher win rate, because you're targeting less. So for the past 11 months you would have had more wins and made more money than using the both TP structure. Obviously it's not always going to be that case. You need a larger sample size than 11 months to be able to say this is the best. Otherwise you're just overfitting it based on the past 11 months. Whenever I've tested it before in the past, it would always work out that having multiple TPs was better. Otherwise you leave quite a lot on the table to run. But it's clear that in the past 12 months the market has been more choppy than usual. Obviously we've had a lot of world powers changing hands. We've had a lot of shit kicking off across the globe in terms of wars, politics, etc., which meant the market has been a lot choppier. So during times like this, the data says that it's better to just use a full TP at TP1. So I think that's what we're gonna do in the meantime. I'm still gonna mark the chart out like this so that we can measure the effect of having multiple TPs. And then when we're tracking our track record, we're gonna keep note of if you did this, if you did that, if you did that, and have multiple scenarios multiple options available for different approaches to the risk management structure. But it's interesting. But yeah, past 11 months, pretty sure I've made something like 54% from what I've put in the signals group, which is nice. I think it was that anyway. I'll have to. I've only got the raw data. I need to tidy it up into a graphic, which I'll do on the side here while we're waiting. So we've retraced quite high up here. We know price is bullish, so it's not like we're expecting it to come down to this level. It's just if it does, we've got a profitable trade, basically. It looks like price is going to keep pushing higher. So before we properly mark this up for trade, let's just wait to see where it's going to react. But I'm liking the look of this session so far. Got a really nice higher high, high low structure that should be quite easy to trade. We just want that EMA to come in. It is already support. We don't need it to actually tap the EMA. We just need price to come down to a fib level that we can actually get a profitable trade from, basically. You could have taken that as the low, but the reason I don't is because I always say you need it to at least tap the 38.2 fib in order to class it as a proper retracement, and it didn't do that. Now it looks like we're breaking higher, so again we just need to wait to see where that high forms to be able to catch the trade from a low to buy it higher like that. You don't want to buy at these levels. Wait for it to fall down a bit first. GU still on. Keep watching. So what we're seeing here on the pound, if you notice, is we've got this collection. Let me change the colour of that. Is we've got these collection of equal highs, and we've also got this collection of equal lows. What the market's doing here is it's had a push higher. Now it's consolidating, going from end to end, just like this. What this does, okay, is it generates a pool of liquidity above, and it generates a pool of liquidity below. Basically, let me move our position out of the way so I can explain this a bit better. What you're going to have here is a whole load of people with sell stops underneath there. What they're saying is that when if price breaks through here, they're going to sell beneath that breakout, hoping that price is going to go all the way down. You're also going to have a whole load of people with buy limits slightly under there, playing off the idea that this liquidity is going to get swept and pushed higher, something like this. What the market will do, or the move that the market could make, which will cause the most amount of damage, essentially, is a move like this, where it sweeps those and then pushes higher. What that's done, okay, the guy with the buy limit, let me move that so you can see it. The guy with the buy limit, his stop gets taken out. And then price reverses, and the guy with a sell limit, his stop gets taken out as well. His or her, I should say. You could see the same from the top as well. But basically, what this structure is doing is it's prompting orders to be placed in the market, because it's generating levels that people are looking to enter from, or to put their stop losses above or below. The market needs to sweep out stop losses in order to move. That's what pumps liquidity in the market, and stop losses being swept is what turns a buy order into a sell order, or what turns a sell order into a buy order. If you want to buy price, you need someone to sell it to you. If you want to sell price, you need someone to buy it from you. So the market will constantly create these levels in the market to manipulate stop losses so that it can take them out, essentially. So you want to be well aware of that when a structure like that forms. What we're actually looking for is price to come all the way back down there and push higher, like that. We're not expecting it to. We're not saying that this will happen. We just have an edge on the market so that we know that if that happens, we have a definite win rate and a definite RR, and the combination of those is a profitable outcome, essentially. So good to be aware of what's happening here. We're still waiting for this to pull back to the 61.8 fib to push higher, so let's see if we get that. On the euro then, we're making higher highs than higher lows, much cleaner structure. We've got a standard fib level trade to take from this one. Now, let's look at some of the other fib levels that price has respected. So this move came down to the 78.6. This move came down to the 71. This move only came down to the 50%. That was in the first hour of London Open. Next move didn't come down at all. That's the one we were waiting for. Didn't even hit the 50. So judging off that, I think we'll go with the old reliable 71%. Sit and wait on this one. Pop an alert on there. GU, pop an alert on there as well. we have a look on the 5 minute, our trade more aligns with the 5 minute than it does the 2 minute. We've got decent amount of fair value here that's been left behind that price is going to want to recover before pushing higher. If we've got our fib from that last significant low to the last significant high, we're looking for it to pull back to the 61, meet that EMA, and then bounce higher. Where have my session ranges gone? Did I only plot them on EU? Let's mark them on GU as well. So we've got this Tokyo high. This New York high. Got this London high. Another Tokyo. I think that's enough for now. I mean, if we look at this again on a 5 minute, we might even want a deeper pullback than the 61.8. If we're trading from the 5 minute, yeah, you can say that's the low, as we had it before. We'll have to just reevaluate depending on how fast price comes down, because we might even look for a 71 fib off of here. That triple top is looking a little bit brutal, so it might pull back down a little bit more than the 61.8, which is good for us because it means we can put the stop actually beneath the low and target the good old 71 like we like to, classic setup, and have something like that instead. But we'll reevaluate depending on how price behaves closer to time. Morning, Kyle. Is this going in the signal group, bro? Yeah, it will. If I get a trade, this goes in the VIP group. So I'm gonna go live Monday, Wednesday, Friday now instead of 5 days a week, just because there's a lot of projects that I'm working on and I'm losing time when I'm sat on live all 5 days. So I'll go live 3 days a week. I've been doing it for, this is the 3rd month now, going live every day. So I've been very consistent with it, showing you guys a lot. All the lives are recorded and they get posted as a video after. So if you do go on the channel and then go to the live tab, you'll see all of the lives that I've done. And you can add up the hours that I'm sat on the charts every day, just trading and watching and waiting. You can always go back and rewatch those if you want to learn from them. But I think going forward, now that we're in March, I'll just go live 3 days a week. Every trade that I place gets posted in the VIP group, whether it's on live or off live as well, which will obviously be on Tuesday and Thursdays from now on. And then obviously all the day trades and swing trades that I take, which I'm not calling on live, those all go in the VIP group as well. VIP group is currently £1 a day, which is, you know, ridiculously cheap. Think about some of the things that you spend money on every single day: coffee, petrol. Whereas this is literally an investment in your future. Euro's going down to our level. That's what I want to see. This one looks nice on the 5 minute. Euro's pretty strong as well. If this one falls through on the 2-minute, we do also have the 5-minute to trade from on the euro. But this has been pretty strong so far. I don't see any reason why it would change character at 10 a.m. So yeah, now we wait. Okay, so what we're seeing here is quite nice. We can see that price is falling. Now we've got a pin bar candlestick, and now price is looking to raise. So ignore this tick candle. I always say ignore that because it's not closed. Following this tick candle can be very dangerous as a beginner. You're acting essentially if price is closed like that, which it hasn't. You can only look at the candlesticks on the left, which have had the full time that they need to close. But right now here we do have a pin bar candlestick as we're looking for an entry. So this is good to see. It's not good enough yet to enter from, but it's on the right track. So the euro has bounced off the 50% it seems at the moment. We'll see if it comes back down or if it breaks the high. GU, check on our 2 minute again. So we're reacting with the EMA now, and from this previous low to that high, that's happened above the 50% fib, which is quite major. But we swept these lows, as you can see there. We swept the lows, tweezer bottomed, couple hammer candles as well. So if this is aggressive price, maybe we do look for that 60% fib entry. Go for 9 pip stop. Let's wait to see when price breaks out again. But yeah, we do have a very bullish London session this morning. This could be the move for us off the 61. Let me put a note for everyone that joins. Waiting for confirmations before entry. Not limit order. So we're testing these lows, still nowhere near our level. We are seeing rejection from the 50% though, which is good. So let's just wait to see what this next candle does. But I think we could say this is our confirmation because we have a hammer candle, and this also acts as a tweezer bottom with that. But let's just see where this candle closes first before we set a limit. Euro's getting close as well. So this didn't push higher, this came back down, which is good for us. So here we want to see a confirmation. Here we kind of have a confirmation if that closes as is. So let's start marking this up. We've got a, call that a 9 pip stop. Yeah, okay, so we've got a hammer candle combined with a tweezer bottom. I'm gonna place this. Okay, so TP1, TP2, entry after 61.8, 9 pip stop. Let's place this one. $28298. Add our spread to the entry. 28208. Stop loss. That's the collection of highs. Alright, that's all my limits placed. GU. So post that in the groups. Let's get them levels. Entry. Stop loss. TP1. TP2. RR is 3.88. Post this one in the free group. I've not put a free trade out for a while, have I? Although I am literally sat here on live for free. But it can go in the free signals group there too. Bosh. The euro isn't looking that good on the 2 minute. We haven't had any confirmation candles yet, so we're not entering in this. Let's wait to see if this one is a confirmation candle. So just stay watching this one on the sideline. We're meeting our EMA now, so let's see. If we do, let's mark it up. Nope, not a confirmation. Could look for on the 5 minute if it's getting a little bit saturated now. Two minute is valid. We just need to wait to see if this is a confirmation or not. Six pip stop. Let's price it up just in case it hits. Are we saying that's confirmation? Don't know about that. It's kind of a hammer. It's only really a 1 minute confirmation though. You've got the 1 minute hammer, you've got the 1 minute engulfing. Could say that is a 2 minute confirmation. Yeah, it looks like it. It looks like that's the confirmation we needed. So let's set an order on the EU as well. Off the 78.6, nice. Let's price this up then. So 6 pip stop. Euro. Alright, looks like we're tagged in. That is tagged in on both. Right, place them on my accounts. $1.07217, 1.07289, RR equals so that's got a nice reaction. GU was also tagged in. show that on the 2 minute where we entered from. Nice reaction for EU. Set some alerts on this. So yeah, now we wait. Those are valid trades. So now you just gotta set and forget. Sit on your hands. Do whatever with them to distract yourself from just sat watching it basically. I know I sit and just let it play on the live, but obviously we're on live. But if you are trading, I do recommend you just literally just set your alerts and wait to see them go off rather than just sat watching the charts, especially if you're new to trading. It's not really a healthy habit. I only do it because I'm on live, so I show you guys what's happening. Don't be scared. Just a couple of red candles. The reaction from the 61.8 on GU is looking nice. Wave structure's been valid up to this point. Yeah, it's not a nice drop off from that candle, but we've got the edge on our side. Wait to see if this one hits or not. That is not the candle that we want to see, but you got to accept the risk when you place it. I've done my journaling for the past whole history of the signal group. Actually, it turns out I've only got a 38% win rate, which is a lot lower than I thought. I thought we were about 50%, but it turns out we're like 38% win rate, but we still managed to make 5% a month on average. So it goes to show win rate doesn't really mean that much, as long as you've got decent risk to rewards. And I see a lot of the same from a lot of actual traders as well. I see a lot of people have a less than 50% win rate for people that I can actually vouch for as traders, not these fucking scammers that use pip counts and shit. But yeah, it looks like these ones will probably hit stop loss. Maybe GU might be alright, but EU looks a bit tight. EU's probably going to stop. Yeah, we're going to stop there. Stopped out. Don't be scared. We're not scared. Saw priced him. That's literally what a win rate means. You win some, you lose some. Let's call that one Euro stop loss. Might be a similar story on the pound. Looks like we're changing character lower. Might be a double stop. No, there we have it. Stop loss on GU as well. It's a shame, but like we say, it's all priced in. We're not scared. So we've closed beneath the EMA now today. So maybe the buy side is exhausted, and we're going to look for some sell positions on the way down, it seems. So let's see if we can actually form lower, lower, lower high structure underneath this EMA. And if so, we're not done for the day. We can still keep looking for positions on the downside if the market is going to change character now. So let's keep eyes on. Don't let losses get to you personally, otherwise you're a terrible trader acting off of emotion. You've just got to act off logic of what the market's telling you. So on the pound, it looks like we pushed, consolidated, reversed, and now we're making lower lows and lower highs. We do have lower low, lower high structure beneath the EMA now, which is nice. What we want to see is that second break. Okay, so this collection of lows, this is the first break beneath it. We want to see, like I just said, a second break beneath that to confirm the structure. Otherwise, this could just be a fake out lower before we push higher. But this is setting up quite nicely now. Still only about halfway through London session, so still got plenty of time for more trades. We want to see lower low, lower high, catch a sell here to the downside just like that. So we'll keep an eye on this one. Euro's still just umming and ahhing, so we'll have a look at the pound from now on. Morning, Milo. Hope you're well. No, you've not missed much. We've hit 2 stop losses this morning. One on GU, one on Euro. Same trade idea, but obviously just spread across GU and the Euro. So we've seen a massive expansion this morning. Prices closed above the Asian high, taking out the liquidity above, and then broke higher again. And we've just had a series of higher highs and higher lows. We tried getting in on this low, to push higher high, but we've actually broke beneath, and now we're making lower lows and lower highs. So we've still got a good 1 hour, if we say, for a trading range for the end of London. So what we want to see is this low break, which it has on the Euro. So now we've got that first break of structure and now a second break of structure. So we can start to look if this is going to trade lower as well. So there's still time to catch more trades in the end of this session. We've not seen that on the pound. Pardon me. We're not seeing it on the pound here. We're waiting for this low to break, but it looks like we are seeing it on the Euro. However, we've only got one resistance from that EMA on the Euro. So it's not something that I'd look to sell on the Euro. Whether we just sit on a minus 2% day, that's absolutely fine. But it would be nice to see more trades come lower here. Yeah, I don't even like using the word unfortunate, mate, because it's not really got anything to do with being right or wrong. That is just how it's how your win rate is priced in. You have some wins, you have some losses. In the end, they all add up. I've just gone through the trading journal since starting the signals group, and I've worked out I've only got a 38% win rate, which is lower than I thought. I thought we were about 50%, but no, it turns out I only win 38% of the trades that I place. Meanwhile, I still make 5% a month for the past 11 months running on average, which is pretty good. I've measured up the scenario of if we take a full take profit at TP1 versus the TP1, 2 and 3 partial profit structure. For the past 11 months, it's actually been slightly more profitable to just close all out at TP1, which is really nice to see because it means you've got a higher win rate in theory and you're making more money by doing it because you're targeting less pips. So past 11 months, we've had a 55% gain with a 38% win rate for 11 months. Max drawdown 6.65%. So that's pretty sweet. Let's say you had a 200k funded account running through that, you've made over 100k and you've kept the account, you've not blown it, 6.65% drawdown. So I've tabulated all that, I've put it into a nice graphic for people. It should make people a lot more comfortable with taking losses. That's always the thing with people learning how to trade is they get put off by losses, and you just have to accept that it's part of the game. Yeah, of course, mate, the RR makes up for it. We're targeting like 3 to 5 RR most of the time. So with that, as long as you're winning more than 20%, I think that's your edge off the top of my head, and we're winning almost double that. So that's a really good edge. But yeah, 55% in the past 11 months. We've got March to close out in the signals group, and then we've been running for a year, and it'd be nice to get that yearly track record shown with all the wins and losses. But yeah, I've just actually finished the graphics on those, so let me post those in the group. Should make people a lot more comfortable. When you accept the win rate, it's a lot easier to trade, because every single trade that you execute, knowing that it's a valid setup, you accept that, okay, I've got this amount of chance of winning and I've got this amount of chance of losing. You stop looking at trading in terms of like, oh, I hope this wins. You don't care if it wins. You know that there's a chance that it loses. You place it anyway. You do that over large sample size of trades, and that's what gives you the edge. Okay, it's like owning a casino. You know that you've got an edge on that roulette wheel, so you let the bastards spin it every single time. Yeah, they're going to win some. Yeah, they're going to lose some. Each individual case is not what matters. It's about the long set of series of spins that makes you the money as a casino owner. And that's exactly how you have to think of trading. the market's going to take some from you. You're going to take some from the market. But in the long run, the law of averages is what's paying you your wages. Right, okay, so we have properly closed beneath that as a break of structure on the euro. So we might look for a move here now. Let's move this out of the way. If this is printing as a low, we've got two highs, lower highs, respecting the EMA. If we want to catch a trade here, I'd probably say 71. Oh. Stops there. TP1 and 2. Something like this. So wait to see if price comes up to our level, and that's the trade we'll be looking for. We've got a corrective structure on the pound, but we've not yet broke that low, so we've not got that directional confirmation yet. Let's wait to see. Put an alert on this. Sit back. Okay, so price is coming up to our level. We've got the EMA coming in as resistance again. We've got lower low, lower high structure that's forming. You've got this acting as liquidity, which will likely get swept. Now, price is looking like it's going to come and meet that 61.8. However, we do have fair value above that, which will probably get tapped into. We could go for, we've got options here, right? So we could go for a deeper entry and not cover the high, something like that. Or we can go for our usually safer, because you've got the breathing room, 71% level, which I think I am going to go for. So we need to see some candlestick rejections above our zone as we're taking out that liquidity, and then we'll look to get tapped in from that 71% level. Let's get our usual note up there. Let's wait for this one. Right, okay, so that bottom level's been hit. We didn't even pull back to the 61.8 on this, so that tells us that price is selling off quite aggressively. It's not pulling back deep enough for us to get a valuable trade on that. GU is now, the correction is now broken. We're just waiting for this level to break to secure that to the downside. It's getting quite late in the London session. We've still got another 40 minutes valid if we want it. Let's keep tracking. Let's keep tracking price. We are seeing lower lows and lower highs beneath the EMA now, which is good for us. So let's just see if we get a valid setup amongst this. So keep eyes on. Okay, let's look at this then. So now we have a new lower high and a new lower low. So we didn't really want to trade off this because it was still quite a new structure. But now that we do have that low and this EMA coming in, we could look to get a sell off that 71%. If price comes back up there without going lower first. Quite a tight trade, but it's valid. 3.2. Let's see. Got an alert on the Aussie dollar. That'll be a John Wick setup. So we've got this bearish trend line. Price broke out, retested it, and now we're breaking out of this substructure. So how we play this one is we look for a retracement on this wave. Let's look for where the market's inefficient. So we've got fair value gaps all the way down here. This is one big order block down there, which has then created a fair value gap and broke higher above that structure. Where I'll probably look to enter off this is probably the 71, my favorite level. Stops beneath the low, and then we'll target our TP1, 2 and 3 up there for a push. So if this is going to be the reversal, we just need to wait to see if that's true or not, or if price keeps pushing off higher and higher and higher. So that's a nice sell we're waiting for. Now this is likely the same on New Zealand dollar, as we see there. So again, same idea. Look for this trade. Just like that. Okay, right, so we've got a sharp increase in price, bringing us back to the 71 level. We don't have any candlestick confirmations just yet, but let's price this one up. TP1, TP2, we've got a 4 pip stop. No, it's broke the high. Broke the high without confirming, so no entry, which is exactly why we wait for confirmation. If we look at this from this high, let's see if we're given any levels. 70, 61.8. Sweeping the liquidity from these highs throughout it. Stop there, entry there, TP's there. Let's see if this confirms on the higher fibs. So we swept liquidity there, filling in the higher imbalance. This one is a 6.5 pip stop. Let me price it up. Six and a half pips. EU. Okay, that is a rejection, so I am going to limit this. Let's get it placed. Bosh. Bosh. Cool, right, I'm in my limits anyway. Got my limits on. Let's place the TP1, TP2, like we do. Let's get a limit set on this. Bosh, send out to the group. It's a 3.29 hour trade. And we're in. See where this takes us. We've got a inverse hammer and a doji coming from those fibs. Price has made a strong 2-minute candle up. Let's see if we continue the lower low, lower high structure, or if we take out the high again, making it a 3% loss day, or if we can pull it back with this trade. Set the limits. And then we wait. Looks like this one's going to stop out as well, sadly. Choppy day for the EMA strat, eh? Looks like 3% down if that taps. It's nothing to worry about, it's all priced in. Yeah, GU's made a break higher as well. Stop loss hit. Well, bad day in the markets, guys. Nothing to be scared of. They happen. 3% down for the day. Right, well, it looks like that's the trading day over. Minus 3%, it's probably the worst day I've had in a while. February was a pretty choppy, bad month for the strategy portfolio across the board, but still nothing to worry about, guys. It happens, you get times like this where your stop losses get hit, you have to accept that. It's priced in with your win rate, but it's all factored in the long run. So don't let it scare you. Reacting emotionally to losses is one of the hardest things that you need to learn in trading. It's the hardest part about it, but hopefully you can see that I am literally not scared in the slightest. I'll take 2 losses and still execute a third trade if it's valid, and not give a fuck if it takes another loss. That is how you have to be. You have to just completely cut out emotion attached to any wins or losses. Your effort in terms of placing that trade is not related to the outcome. As long as you've placed a valid entry, it does not matter if it wins or loses. It's the sum of those trades over the long run that's going to pay for it. So if you noticed in January, we won like nearly every trade. And then now, recently, it feels like most trades lose. And it happens like that. They do normally come in clusters. The worst thing you can do is stop trading. Because when you stop trading, you feel like you're not exposed to any risk that way. But you're also not exposed to any reward that way either. And if you want to actually let your trading edge play out, you need to take every trade that fits your plan. Okay, so obviously have caps on. If I take this many losers in a day, I'm going to stop trading, or if I take this much loss in a week, I'm going to stop trading. Stuff like that is important, but you should also be aware that don't get scared. Don't feel like you have to sit out the market because you've lost the past X amount of trades. If you do that, you're never going to get the reward from the wins either. So yeah, that's a little educational note about handling losing streaks in trading. It's absolutely fine. Some months it's amazing, some months it's terrible, but it's all factored in. So get to grips with your win rate, get to grips with your RR, and be comfortable with looking at it like a statistic and not an emotional, I'm going to be happy if I win, I'm going to be sad if I lose, because that is not what trading's about. So yeah, hopefully this one's been educational. Unfortunately, we are down 3% so far today. A little bit unfortunate, but it is what it is. We'll keep going from here. So thanks everyone for tuning in. I'll see you again on Friday.